Hey everyone, welcome back. So in the last video we did question 1 of November 20 paper 23, right? You remember it was regarding mostly depreciation on non-current assets, and in this video we will be solving its second question, right? So this question is a mixture of bank reconciliation statement topic and accruals and prepayments, right? So let's begin with the question. It says, Inyola compared her bank statement for July 2020 with the bank columns of her cash book, and then she has provided the following information. Right, now what do we have? Overdrawn balance shown in the cash book at 31st July 2020. Overdrawn means this is a bank overdraft situation, right? So this means that if we have a bank overdraft in question, its balance will appear on the credit side of my cash book. Then what else are you provided with? Direct debit payment dated 25 July 2020 had not been entered in the cash book. So since if this is not entered in the cash book, this means that if you want to adjust the cash book balance, we have to adjust this amount, right? Then a check received from a customer on 12th July was dishonored. So dishonored, again, whenever a check is dishonored, your bank is notified about that. You do not come to know about it at the same time, right? And when does the business comes to know about it? After receiving the bank statement. So this will also be adjusted in the cash book. And it also says that the dishonored check had not been entered, had not been recorded in the cash book, right, amounting to 665. Then also bank charges on the bank statement had not yet been entered in the cash book. Of course, you come to know about the bank charges after receiving the bank statement, so they are later adjusted in the cash book. Also, it is given that you have some unpresented checks at the same date and uncredited deposits amounting to these values. So these two are adjusted not in the cash book but in the bank reconciliation statement, because unpresented checks are already credited in the cash book and uncredited deposits are debited in the cash book, right? So they are present in the cash book, but due to timing differences, these are not processed by the bank on the same dates. So that is why they do not appear in the bank statement. Therefore, they are adjusted in the bank reconciliation statement, right? I'll just quickly show you the format of this as well, that how is the adjusted cash book made. We have the balance brought down. The balance brought down can also come on the credit side, which is the unadjusted balance of cash book. Why would it come on the credit side if it's a bank overdraft? Then what appears on the debit side is the credit transfers, that is all the checks deposited in your account, but the business doesn't know about it until bank statement is received. And other than that, on the credit side, you will have standing orders, direct debit payments, dishonored checks, bank charges, etc., right? And then when you are going to balance your cash book, the final balance which will come as a result of these adjustments will go in your statement of financial position, right? And how is a bank reconciliation statement made? There are two methods depending upon what is given to you in the question. If you are given with the balance as per bank statement, then start with that, and then we will be adding uncredited checks, subtracting unpresented checks, so that we have the balance as per adjusted cash book, right? So this balance should match with the final balance extracted in the updated cash book. Or if we are not given with the bank statement balance, then obviously we have to start with the adjusted cash book balance. Then we will be adding unpresented checks, subtracting uncredited checks, and then we will be arriving at the balance as per bank statement, right? So keeping all of this in mind, let's start with the first part. In first part, we are asked to do what? We are asked to calculate the corrected balance of the bank columns in the cash book at 31st July, which means that we have to adjust the balance which is given to us in the question. Right now, it is up to you if you want to do it through a T account or in any other way. You can do that. T account is not required, so it is up to you if you are comfortable using any other method as well. But I'll be teaching you how to do it through the T account, as it is a much more simpler way to find out the missing figure. So suppose this is my cash book, and I am given with the balance brought down amounting to 3420, but please keep this in mind that this is a negative balance, right. So, this will appear on the credit side as balance brought down 3420, right. Then what else is happening? Direct debit payment. So, direct debit payment means you have instructed your bank to make certain payments on your behalf without notifying you every time. So, that is already deducted from your bank balance. So, this will again appear on the credit side 350 direct debit, right. Then we have a dishonored check. So, dishonored check, again, if a check, for instance, if a check is deposited in your bank account, what is the double entry? We debit bank and we credit the person, for instance, any debtor. But whenever it is dishonored, we have to reverse that double entry. And what is the double entry to record a dishonored check? We now debit the debtor and we credit the bank account, right. So, this was received from a customer. So, customer or debtor, whatever is given to you in the question, you can write that because it is a dishonored check 665, it will also be credited. And lastly, there are bank charges in the question. So, bank charges, again, bank charges being an expense are debited, and since they are paid from your bank account, so bank account will be credited with 45, right. So, in this question we do not have anything appear on the debit side, so do not worry about that. Just total this account, and whatever the total will be, the same will be your balance CD figure or the corrected balance which you were asked to calculate. So, 3420 plus 350 plus 665 plus 45, that will be 4480, and the same is your balance carried down. Suppose if you do not want to do it through the T account, then also let us see how we can do that. We will again be starting with the opening balance. So, the balance brought down is negative figure, right. Do not forget to put the brackets with it. 3420 is negative. If you forget that this is a negative balance, then your answer will change. It will not be the same, right. So, 3420, then again we have direct debit, that is also a payment. So, negative figure 350. Then we have the dishonored check amounting to 665, again appearing on the credit side, so negative figure. And lastly, bank charges amounting to 45, so again a negative figure. If there is something on the debit side, for instance dividends received, any other income received, interest received, credit transfer, so that will appear as a positive figure. So, if you just total this, you will arrive at 4480, which is an overdrawn balance as per your adjusted cash book, right. So, this is the final figure. Now, after calculating the corrected balance as per your cash book, the next part says to prepare a bank reconciliation statement at the same date, clearly identify the bank statement balance at that date. Now, if you can notice that in this question we are not given with the bank statement balance. So, let us not start the question with balance as per bank statements. Let us start it with balance as per updated cash book, because that is what we have just calculated. And what is the balance? The balance is a negative figure, right. So, do not forget to put brackets, right. You can also say overdraft as per updated cash book. Now, again let us go through the format. If you are starting the bank reconciliation statement with adjusted cash book balance, so we add unpresented checks and we subtract uncredited checks, right. So, that is what we will be doing, add unpresented checks. So, unpresented checks are how much? These are 1290 and uncredited is 410. So, 1290 will be added, right, and 410 will be subtracted, right. Now, let us see what is the balance as per bank statement. So, negative 4480 plus 1290 less 410, that would be negative 3600, which is again an overdrawn overdraft as per the bank statement. So overdraft as per bank statement. The only thing that is different using this method, that this approach, when we start with the updated cash book balance, is that since bank statement balance is not given to us in the question, we cannot recheck the balance which comes in the end, right? If we were given with the bank statement balance, so we'll directly start with that, and then we'll be arriving at the balance as per updated cash book, which we had already calculated in the first part. But using this method, we cannot check that. So that's also fine, right? It's important that you have both the methods in your mind. Okay, so we are done with first two parts. We are done with 8 marks in total. Now let's move to the third part, part C. It says, Enola is concerned that her bank balance has decreased significantly. Yes, this is a concerning point, as opening was also an overdraft balance and closing is also, or just let me say that the adjusted one is also an overdrawn balance, and that is a big balance. So she is considering how to improve her liquidity. Very good. Now suggest one effect of each of the following proposals. Now she is keeping 2 proposals in front of us, and we have to suggest that what would be the effect of each of these proposals. Effect could be explained in any way, whatever point comes to your mind, but if it is relevant to the requirement, that would be great, as it is just of 1 mark. You are given with 2 lines only. So the first option is to hire new non-current assets instead of purchasing them. So you don't purchase the non-current assets, rather rent them from a third party, and you will be paying monthly rent for that. So you don't have to arrange a big amount for its purchase at that point, right? So this will save a lot of your cash, or should I say that it will retain a lot of cash in Eneola's business, right? So this will be the effect of not purchasing an asset, rather renting it from an outside party, right? So let's write that down, that how we can write all of this in this space. Right, so I have written that it will save the huge cash outflow since she won't be purchasing that asset, but monthly hire purchase installments will have to be paid, right? Or if any other point comes in your mind, for instance, if we are not buying something and we are renting it, so sometimes the charges differ, right? The charges are not as same as the purchase price, they are not spread just like the costs, right? Sometimes there are interest charges as well. So you can say that he may be paying more through installments than if she had purchased the asset, right? It's up to you, just have to write one effect, so it could be anything. Moreover, you can also say that she doesn't have to charge depreciation on this non-current asset because she won't be owning that asset, and repairs and maintenance cost will also be the responsibility of the company from where she is renting that non-current asset. So that is also not her responsibility, right? So whatever comes into your mind, just write that. Then what is the second proposal? Delay paying credit suppliers. Very good. Now if she is delaying paying her credit suppliers, what will happen? She will be again retaining cash in her business, which could be used for other purposes rather than paying suppliers. But one effect, the negative effect of this would be that the suppliers won't be happy with this decision of hers. Will they be? No. Why would they want their payments to be delayed? Because she wants to retain cash in the business, right? So this might damage relationships with the suppliers. So I like this point, so I'll be writing that. Let's see how I can fit this in this space. Okay, so what have I written? This will definitely retain cash in business for a longer time since she wants to improve her bank balance, but it will deteriorate relationships with the suppliers. If you don't want to write that point, you can also say that instead of writing that it will damage the relationships, you can say that she won't be then availing the cash discounts on early payments, right? Because she will be delaying the payments. Similarly, the suppliers may start charging interest on her overdue on her late payments as a result of this action of hers. And worst case scenario, they might even refuse to sell her in future. So that is up to you. You just have to write one effect. You can write anything, but it should be relevant with the proposal that she is giving to improve her bank balance, right? Now we are done with 3 parts. Now the last part, the second portion of this question is completely related to accruals and prepayments. So let's begin. The question says, Eniola's financial year end is 31st July 2020. So what do we do when we read the year end? We write down the beginning of the year, even if it is given in the question. So if the year end is 31 July 2020, what would be the year start? The next date, the next month, right after the year end. So what comes after July? August. So that would be 1st August, and year would be not 2020 because that would be the next year, rather 2019. So 1st August 2019 till 31 July 2020. She provided the following information about the rent and rates of her business. As you can also see in this question, that in this question we have to make a combined rent and rates account, right? So this is going to be a really interesting and a different question. Now what is the information? On 1st August 2019, that is the beginning of the year, she owed 2 months rent totaling $900. Okay, so in the beginning she owed 2 months, which means that this is what an accrued rental expense balance given to us. Can we find out that what is the per month charge for rent? Yes, we can. Since 900 is for 2 months, so 900 divided by 2 would be 450 per month rent charge, right? So 2 months of rent she owed. Now accrued expense, we know is what? Accrued expense is a liability. So if we want to make the T accounts, of course we will be making the T account for rent and rates. So being a liability, its brought down will appear on the credit side. Why am I writing all of this? Because when you will be making the T account, you might have forgotten many of the things which you must have read in the question, right? Although balance brought down is already written on the credit side for rent, but sometimes that is also not given to you, so you have to make the adjustments, the opening balances. Now let's move towards the rates information. It says, on the same date, rates of 260 were prepaid up to 30th September 2019. So how much rates are now prepaid? Prepaid, we know is what? Prepaid is an asset for the business. This means that you have already paid for an expense, but you are yet to receive services against that expense. You will be receiving that in future, so that is why it becomes an asset. So rates were prepaid. Now how many months does this 260 represent? That we are not told, but again we can find that out. On the same date, what date? On 1st August 2019, it has been paid till 30th September. So how many months? August and September. Again 2 months of rates were prepaid at the last year end, which belongs to this year, right? So these were paid last year, however they belong to this year. And again the monthly charge for this would be 130 per month. So 260 divided by 2 would be 130 per month. Now since these were prepaid, they represent an asset. So we know that the balance brought down for an asset appears on the debit side. You can also see that for rates, the balance brought down is written on the debit side, representing that it is an asset. And for rent, it is written on the credit side as it was accrued. So this is a liability. Accrued means you have consumed that expense, you have incurred that expense, but you haven't paid for that yet. So you will be paying that in future. You are liable to pay for that. So that is why it is a liability. Now, what is happening during the year? During the year ended 31st July 2020, the following payments were made by credit transfer. So credit transfer means through bank. These were paid to the third parties. Okay. In 2019, 2 payments were made. 7 months rent 3150, 12 months rate 1860 on these dates, and then in 2020 on 1st March again 6 months of rent was paid. Okay, so don't get confused, don't get worried that how we are going to adjust all of this in the rent and rates account. First of all, keep this in mind that whatever payment is made for any rent, for any expense during the year, all of that payment has to come in that account. Because why? What is the double entry for these payments? You are paying through bank, so bank will be credited 3 times on these different dates. 3150, 1860, 2700, so bank will be credited, and against that your rent and rates account will be debited 3 times. All of these are happening on 3 different dates, so all of this will be written separately. And after that we will be making adjustments for whatever, if something is accrued or if something is prepaid, right? So whatever you are paying, you have to record that in that expense account. So let's first do that. Two payments are happening in 2019. First one is happening on August 1st. August is already written, so you don't have to write that down again. Bank, and it is happening for rent 3150. Okay, so for rent 3150. Then next one is happening on October 1st for rates 1860. Right, let's use another color for rates. October 1st again through bank, this is for rates 1860. Right, then and the last one is happening on 1st March 2020, same financial year, same accounting year, but different calendar year. So 2020 March 1, rent 2700. Now your dates will change. 2020, and for March 1st through bank it is happening for rent, and the amount is 2700. Now let's divide the rent and rates, that what belongs to this year, what was for previous year, what was happening for next year, so that we can correctly find out what will go in the income statement and what is the accrued and prepayment, right? Just keep this in mind that whenever you are preparing any expense or any income account, the maximum things that might come in that account would be 4, or you can say even 5. The first one would be, of course, the balances brought down, if they are given in the question, if that is happening. Then the next thing would be whatever you are paying or receiving, right? Paying in case of expense, receiving in case of income. So the bank figure will also come during the year, whatever you are paying. Then the income statement figure, right, in case of expense as well as in case of your income as well. That is what will go against that expense or income which belongs to that year only. So that will go in the income statement. Then if there was a balance brought down, then there are chances that there would be a balance CD as well. Sometimes it's not even there, so it's okay. This is the maximum that can come. And lastly, of course, the totals. And then after the totals, the brought down again. So this is the maximum which can come in your income or expense account. Students sometimes forget that they have to show the balancing figure as income statement if it is not given, or the balancing figure would be the balance CD figure in the end of the T account. So if you have this list in mind, you can check whether you have calculated all the relevant figures in that account, right? Now let's deal with rent and rates payments separately for the T account, right? Let me attach an extra sheet for that. Let's begin with rent first, right? So what was the position in the beginning of the year? We were told that rent of 2 months was owing, right? So this means that 900 was owing, which means that it belongs to which months? If it was owed on 1st August 2019, so this means that it is of June and July 2019, right? Because from August our new month would have started. So it was of June plus July 2019, right? Then what was happening for rent? In 2019, that is on the same date, very good, on the beginning, first date, in August, Eniola paid 7 months of rent amounting to 3150. Okay. One more thing that you also have to do whenever you are given with the combined amount for an expense. For instance, this expense belongs to 7 months, this payment belongs to 12 months, this payment belongs to 6 months. So please recheck that whether the per month charge that you calculated for brought down is the same for the next year's payments, or whether it has increased or decreased, because this might also be happening. So if this is of 7 months, then the monthly charge would be 3150 divided by 7, 450, right? So this is same, it hasn't changed, this is per month. 1860 divided by 12 would be 155 for rates. Now can you see that the brought down, or should I say that last year we paid 130 per month for rates, but this year it has increased and it is now 155 per month. So when we will be doing calculations for rates, I'll let you know that how do we go about it, how do we calculate the yearly charge or yearly expense if the rates are different, right? So because since this also belongs to current year, this also belongs to current year, so we will be using both of these figures for different months. What you just have to keep in mind is that if you are given different rates or different months information, recheck that whether the per month charge is same or not, right? Let's do for 2700 as well, as it represents 6 months. So 2700 divided by 6 is same, that is 450 per month. So for rent it hasn't changed, but for rates it has. Now we are doing for rent right now. Now she paid on 1st August 7 months of rent amounting to 350. Now the payments have now started. The first payment was made on 1st of August amounting to how much? 3150. Yeah, 3150, and it represents how many months? 7 months. Now the 7 months for which she has made the payment will begin from June 2019. As for June and July, she had not made the payment, right? Our year is, the current year is from 1st August 2019 till 31 July 2020. So whenever she is making a payment, she first has to settle any accruals that are there for her expense. So the accruals will be of last year first. So from these 7, the first 2 months would be July and June 2019, which belong to my previous year. So this is now settled, the 2 months. Then how many months are left? From the 7 months she has made the 2 months payments. Then the next 5 months would represent my current year payment, current year, right? And they will start from August 2019 till August, September, October, November, December, till December 2019, right? So 5 months of current year charge, current year payment has been made. Very good. First she has settled the accruals, then she is making a payment for the current year 5 months. Next, what is happening? When is the next payment happening? The next payment for rent is happening on 1st March. Okay. So the next payment is happening on 1st March, which is of 2700, and it represents how many months? 6 months, right? 6 months. Now let's see whether these 6 months complete our current year or they do not. So 6 months means from January 2019 till January, February, March, April, May, June 2019. Now this represents 6 months. So has she paid for the full current year? These are the 6 months, right? And previously she made payments of 5 months for the current year. However, there are 12 months in any year, so still 1 month is remaining, 1 month of payment is still pending. So this means that 1 month of payment is accrued for the current year. 1 month accrued rent expense in the current year, right? Now let me just give you a recap. There were 2 months of accrual for rent. When she made the payment for 7 months, she started payment for the previous year first. So she settled the 2 months of last year first, then the next 5 months belonged to current year. After that, she made payment for the 6 months. Of course, the 6 months payment would also fall for the current year charge. So after 5, the next 6 months, although they belong to current year, however, in total for the current year charge, she has made payment for 11 months, right? Don't get confused that this is 7, this is 6, so in total 13 months of payment is made and 1 month belongs to the next year. No, that is not how it is working. Of course, the total is 13 months, but from this 13 months, the total months for which she has made the payment in the current year, 2 months are of last year and your 11 months are of current year. So this means that 1 month of payment is still accrued. So this is what is actually happening. Now after understanding that how many payments are of this year, we have to find out 2 things. First thing is that what will go in the income statement as current year charge. So we know that since we follow the matching concept, we know that the current year's incomes should match with the current year expenses. So even though there is some accrual or there is some prepaid, we still show 12 months of expense and incomes in the current year. So for rent, the per month rate hasn't changed. So we can find that out, that for 12 months how much rent is incurred. The monthly charge is 450, right? So 12 months multiplied by 450 would be 5400. Even though 1 month of rent is accrued by the year end, what will go in the income statement? That is how much is incurred, how much she should have paid for 12 months, and that will be 12 months multiplied by 450. So in total 5400, that will go in the income statement. How do we show that in the income statement? What is the double entry? We know that all the expenses are debited in the income statement, so income statement will be debited with 5400, and my rent account, or in this case rent and rates total account, will be credited with 5400. But this is just for rent. We still have to do the calculation for rates. Now second thing which we also have to find out, that is the accrual for 1 month, right? So 1 month is accrued. Accrued again represents a liability. This represents a balance carried down figure. We know that on which side for a liability its CD appears, on the debit side. And that would be, since it is just of 1 month, so we know that monthly charge is $450, right? So it is very important that you know your timeline, when is your year starting, when is it ending, how are the payments being made, what is the breakup, which payments represent which year's payments. That is, firstly, if there are any accruals, so that will be settled first, then there will be current year's payments, and then in the end you should know that how the transfer is made to the income statement, and how any accruals and prepayments in the year end are shown and on which sides, right? So let's first write all of this for rent in the combined T account which we are required to prepare. So first thing that will go in my account for rent would be what is the charge for income statement, and that we have discussed that it would be of 12 months. So we will show that separately for rent and for rates. For rent it is how much? 5400, and that will be on the last date, so that is July 31st. Okay, please keep this in mind that even if there are accruals or prepayments for the current year, still 12 months of expense will go in the income statement, because you are incurring that expense for 12 months. In case an expense you have started incurring for few months, like just 2 months before the year end, 6 months before the year end, that expense has started. So that is how you will record that for just those months. but since she is incurring that expense for 12 months, so that will go in the income statement. Then also there is an accrual for rent and accrual CD. So 1 month is accrued, we know that that will appear on the debit side again for the last date, on the last date July 31 as balance carried down, and that is for rent per month charge 450. It was just for 1 month. Now just how we did for rent, we have to do for rates as well. Okay, so for rates, now what is happening for rates? The brought down was rates of 260 were prepaid up to 30th September. So for rent it was accrual, for rates it is 2 months of prepayment, right. So in the beginning the brought down, that is on August 1st, there was 2 months of rates prepaid representing 130 per month. Now again, what is our timeline? Our timeline is this: for the current year, 1st August 2019 till 31st of July 2020. So if this is a prepayment, this means that it was paid last year but it belongs to current year, and for how many months of current year? 2 months, that is August 2019 and September 2019. So in the current, for the current year this payment has already been made, right. So in current year we have 12 months, of course in every year we have 12 months, but for these 12 months 2 months has already been paid. For rates 2 months had already been paid last year. So now whatever she will be making the payment in the current year, they will start from October 2019, right, because for August and September it has already been paid. Now for rates she is paying just one time on 1st of October for 12 months 1860. So the next payment is happening on October 1st, which represents 12 months, and the total is $1860, and we found out that this the monthly charge has been changed. It is $155 per month. Now again let's find out that how many months represent current year and whether there is a prepayment or not. We know that for the current year 2 months of payment has already been paid last year. So in the current year only 10 months of payment is now required. However, she has made the payment for 12 months. So this means that 2 months of payment is now prepaid, as it represents next year's months. So from this 12 months of payment 1860, how much belongs to current year? Only 10 months, right. So 1860 divided by 12 was 155, and we want it for just the current year. So multiply it with the 10 months, that would give me how much? 1550. So how much is the prepaid expense? 1860 less 1550, or in other words 1860 divided by 12 into 2, 310 is the prepaid rates expense. Now what is a prepayment? Prepayment represents an asset, and we know that for an asset the CD appears on the credit side, right. So again we have to find out two things. First thing is that what will go in the income statement. We know that again in income statement your full 12 months charge goes. So now in this case it is divided into two parts. The first 2 months payment was made last year and the rate was 130 at that time. So use that rate, right. So 2 months, 2 months the prepayment, it was 130. 130 into 2 would be $130 into 2 would be $260, and then for the next 10 months of payment it was made in the current year, and the year monthly charge was changed. It was 155, so that became 1550 in total. So for total 12 months it is 1550 plus 260, 1810. This will go in your income statement. What is the double entry? Income statement debit, rent and rates or rates account would be credited with 1810. This is the first thing. The second thing is how much is prepaid. So in the rent case it was accrual of 1 month. In rates it is prepaid, and it is prepaid of 2 months. Then the rate is not 130, it is changed 155 into 2, that we have already found out, that is 310. This is 310 which will go as an asset. This means that the CD is on the credit side. Now let us put all this in the T account for rent and rates, right. 1810 is the income statement charge and 2 months of rates is prepaid, right. So over here I will write 1810, and in this case there is a prepayment, so that will come on the credit side. Balance carried down for rates 310, right. We are writing rates in purple. Okay. So this is how. Is there any other information? I hope not for rent and rates. We have yeah, there is no other information. We have adjusted all of this in our combined rent and rates T account. A quick recap. Firstly, we were given with the brought downs. Then we wrote the payments which are being made in the current financial year. These all appear on the debit side. Why? Because for any payment, bank account is credited and expense account is debited. Then for each of these expenses we calculated separately that how much is represented for current year and how much if there is any accrual or prepayment. So for rent there was 1 month of accrual expense, and for rates there was 2 months of prepaid expense. So accrued expense becomes a liability and prepaid expense is your asset. That is why CD appears over here for asset, CD appears here for a liability. Now we just have to total this account. You know that there won't be any balancing figure. Why? Because we have put every figure that can come in this account. There are brought downs, there are payments, there is income statement charge, there is CDs as well. So you can see that both of these sides will give you a total of same amount. 260 plus 3150 plus 1860 plus 2700 and 450 would be 8420, and same will be here. 900 plus 5400, 1810 and 310 would be 8420 as well. Lastly, please don't forget that we have to bring down the balance for the next year. So July, after July, August will come. August 1st, balance brought down for rent 450, it's a liability, and August 1st, balance brought down for rates, which is an asset, it is 310. Of course, this wasn't a very easy part to solve, but if you know that how do you break the information given to you in the question, that is how do you find out the brought downs, what will go in the income statement, how do we calculate the balances carried down, then you will be able to solve most of the part for any such question, right. Now we are left with just 3 tiny parts. Let's go. Part E says identify the sections of the SOFP at 31 July in which each of the balances on the rents and rates account would appear. So we know that if there are any accruals or prepayments for any income or expense account, we have to show them in the SOFP as either other receivables or other payables. So for rent, we know that rent was owing of 1 month, so that will come under current liabilities. Let's write that down under current liabilities section of SOFP. This will come as other receivables. And for rates, we know that rates are prepaid for 2 months. So any prepayment of expense, it will go in the current assets as other receivables. Why current assets? Because you have made the payment, you will be receiving the services in future. And why current liabilities? Because you have already used up the services, you have incurred that expense, but you haven't paid for that, so you are liable to pay for that in future. Last part, part F, it says name one accounting principle Eniola would apply when recording the rent and rates in her financial statements. So there are 2 concepts or 2 principles which you can write. First one is the matching concept, of course. or you can also, matching is also called the accruals concept, or you can also write about prudence concept as well. Both of these are correct. But if I have mentioned matching, so you have to explain that how Inula would apply the accounting principle named in F1. So we know about matching, that matching says for current year income statement, show the current year incomes or match the current year incomes with the current year expenses as well. That is how we prepare the income statement. Or if you are writing about prudence, so you just have to say that prudence says do not overstate your assets or your incomes, and do not understate your liabilities and expenses. So by showing the balances carried down in my expense account, I am following both of these principles. That is, neither am I overstating my profits and my incomes, nor am I understating my liabilities and expenses. So if I have written about matching concept, how can I explain this? I'll write that down. What have I written? Only current year rent and rates will be shown as expenses. Of course, that is what we are doing, because as you can see, as you can recall, that we even though 1 month of rent was accrued, still we calculated for income statement charge the 12 months of rent, and even though for 12 months of rates was prepaid, for 2 months rates was prepaid, so still we took just the 12 months of payment in the income statement charge. Why? So that only the current year expenses are matched with the current year revenues or incomes, and we have shown separately what is the accrual and what is the prepayment. Okay, so that's it for this question. This was a bit lengthy question, I must say, but of course you don't have to show the calculations in such details. I was explaining you, that is why I have done that in this much depth. But if you are familiar with the concepts, if you know that how you are going to break the information given to you in question, then of course you will be able to solve this in the limited time which you will be having in exam, right? So let me know in the comment section that whether you understood the concept clearly or not, and if you like the video, please share it with your friends and keep following T Accounts for more content. Take care. Allah Hafiz.